Hello traders and welcome to some market insights with yours truly, Richard, the Elliott Wave Jedi, serving traders responsibly here with Orbex. Today we have a full plate on the economic calendar. There's a lot of volatility expected. Now the AUD, the Australian dollar, has data has been released for the consumer price index, and basically what happened was the CPI increased exceeded the forecast by 0.2%, which provided some bullishness for the Aussie dollar against the dollar, the US dollar. So this was actually mentioned on Friday's previous video on the 25th of January. You might want to check that out. Now, following that, we do have some GDP, gross domestic product, for the euro in France, and then consumer climate in Germany, followed by Governor Carney speaking for basically testifying for the pound for the UK. But right after that, we have the ADP jobs, basically the non-farm employment change for the US dollar in the United States, jobs in the private sector. This is expected to cause some volatility. And then following that, we do have some crude oil stockpiles, let's say, for instance, supply data to be released. And the piece de resistance, the last but not the least, is the Federal Reserve interest rates decision and the press conference, etc., and the Fed statement. Now, as you can see, we have a full plate. There's a lot going on today, and let's just see how that could translate onto the actual charts. So today is Metals and Energy Day. I'm just going to focus on the on gold and on WTI, crude oil West Texas Intermediate. Today is the 30th of January. It is 10:15 a.m. Eastern European Standard Time, and I am on the on the gold chart, XAU USD on the daily time frame. And this just what I wanted to do today is just show you guys a few views that I had previously, let's say back on September 24th, when gold was preparing to shoot for the upside. I mentioned that there is a possibility for this to provide one more squeeze on the downside and then to possibly start a bullish impulse, and it did. All right, following that, later on, as the trend developed for the upside, I noticed the possibility for an extension to actually occur, and then basically I was looking for a wave 2 retracement to actually provide that big impulse and rally in gold, and there you go. It actually occurred just like that. Now, what's happening here is, as the trend developed, it is actually performing on the upside. Okay, so I was actually saying that this could be the free of free, and then it went the free of free, and this is actually going a lot, right? More. But let's say, for instance, with the Q1 report of 2019, which was released for you guys for Orbex traders. By the way, the download link, it's a free download. You guys might want to check the description. Okay, and let's say, for instance, right here in the Q1 report, I was actually expecting wave 4 retracement, a complex structure. Yeah, it didn't go as low as expected. Didn't basically hit the bottom of this channel, right? Lower trend line. But however, the view was on the upside. All right, so it did start the fifth leg. Now, what is happening right now is pretty interesting, and this is where I'm going to zoom in for you guys to give you a very important note when it comes to gold. Now, the point is, as the fifth leg started, even on the daily, let's say on the 2-hour chart, right? I was actually able to track this and successfully catch the move on the upside, right? Notice this points right here. Now, what it's doing right now, what I'm suspecting is basically, let's say, for instance, after the complex structure right here in this minor 4 in an ABC structure, okay? So basically in a flat correction, but with a complex structure in wave B, minute red B. So this complex structure resembles a double free with a triangle in the Y. All right, so we have basically a zigzag right here in W, the X connection bridge, right, for the combination, and then the triangle in Y. So WXY pink. Now, after that, it finalized with a wave C, so A, B, C right here, and it started going on the upside. Now, when I noticed the leading diagonal in the minute green one, I noticed the possibility for a retracement. Then I had something very important right here, which is a zigzag, typically for a wave 2 retracement. And I was able to, as I said, enjoy this move on the upside. And most of you did as well, because this was mentioned previously in the last week, right? And if I actually go on the previous video, you guys can actually see my views right here, doing it live for you guys. So this has developed a move on the upside as expected. So you might want to check the 23rd of January video in order for you to see what this is all about. Now, going back on this gold chart, what I would actually expect for this is, as you can see, the indicator right here showing me a possible bearish divergence, which is a very handy tool because it could actually develop a corrective structure right here. And I would expect this to be complex due to the law of alternation between wave 4 and wave 2, because wave 2 was simple, wave 4 has to be, or might, or could be a more of a complex structure, similar to this, like a sideways move, right? So it could be a triangle as well. We'll see what this is all about, but it could retrace 38.2 of wave 3, default measurements for a wave 4, and then shoot on the upside for wave 5. How much it will go, we will have to know, we'll know more details when it actually starts, if it actually starts. But the point is that if it is extended a fifth leg, it can go up to even 100% of wave 3. All right, so notice the Fibonacci extensions that I have right here from 3 and 4, preparing for either 61.8 or 100% of, I would actually expect 100% to be honest with you, and I'm going to tell you why, because from 3 and 4, I'm actually being eyeballing here the 61.8. So what am I saying here? Just to keep it simple as a summary, gold could continue the rise after a correction, right, after a corrective structure, and could actually go as high as 1340, 1340, all right, which is a level where I would be keeping an eye on, because it could actually be one top and it can turn, right? It's as simple as that. Now, moving on, just wanted to keep the main focus on gold today because it is the FOMC day, and I'm expecting some magic to happen with this yellow metal. Now, with the crude oil, just keeping it simple, on the 4-hour time frame right here, after it developed the move on the upside, I'm noticing a corrective piece right here. Okay, so this could be an ABC structure in a simple zigzag, right? And following that, it could actually go on the upside. It's basically how this thing develops, because it could form let's say a wave 2. If this is simple, if this correction would be simple, then I would be looking on the upside. However, what I'm saying is that it could be deeper for the 61.8 or 50%, and in this case, these levels should provide a more of a bullish stance for WTI. Now, 61.8 is the default measurement for a wave 2, if this wave 2 would be here, and the level is $48 per barrel. Now, we'll see if that occurs or if it would actually bounce from this support. So today we'll see on the crude oil inventories, let's say, in my personal opinion, 52 levels should be watched today to see what happens there. Now, that's basically it for today. Just wanted to send you guys my views. One request, I do need you guys, so if you do want to receive this on a daily basis, please support me with a thumbs up. Please support this project. And as I like to say to all my traders, until next time, stay in the green and many pips ahead.